founded as a crypto miner, CoreWeave pivoted to AI in 2022 after Ethereum's major upgrade slashed mining rewards. It now provides on-demand access to massive GPU data centers for companies training machine learning models or running other heavy workloads. CoreWeave hasn't done this alone. It has forged major partnerships and contracts along the way. Microsoft, for example, is its largest customer, accounting for about 62% of CoreWeave's $1.9 billion revenue in 2024 through massive contracts to supply AI horsepower for Microsoft's projects. Nvidia is another key ally. CoreWeave's entire GPU fleet, over 250,000 units, is Nvidia hardware. And Nvidia also backs the company financially. It holds the 1% stake and even anchored CoreWeave's IPO with a $250 million order. One of CoreWeave's biggest deals came in early 2025, $11.9 billion contract with OpenAI, the maker of ChatGPT, to provide critical cloud infrastructure for OpenAI's models. And OpenAI even received equity in CoreWeave as part of the partnership. CoreWeave sets itself apart through specialization and speed. Unlike the big generalist clouds, AWS, Google Cloud, Azure, CoreWeave's platform is purpose-built for AI and accelerated computing. This focus lets it roll out the latest NVIDIA hardware faster than others. It was among the first with NVIDIA's H100 chips and even whole new systems, like the Grace Hopper superchip. And it offers more flexible, lower-cost GPU access, a refreshing change from the limited, pricey GPU instances on the major clouds. CoreWeave even boasts that some of those tech giants have become its own customers or partners when they needed extra AI capacity, highlighting how its tailor-made infrastructure can outperform one-size-fits-all cloud offerings in certain scenarios. Yet rapid growth brings significant risks. CoreWeave's revenue has exploded from just $16 million in 2022 to $1.92 billion in 2024 as it poured money into expansion. In $163 million in 2024 as it poured money into expansion. That growth required heavy investment in hardware and facilities. The company took on about $8 billion in debt to build out its GPU-packed data centers, XAK, making its model highly capital-intensive and raising questions about sustainability if the AI boom slows or financing gets tougher. Another concern is CoreWeave's reliance on a few big clients. Two customers made up 77% of its revenue in 2024, with Microsoft alone contributing roughly 2/3. And this concentration makes CoreWeave vulnerable if any major client pulls back, a risk the company itself acknowledges. In fact, a news report in 2025 claimed Microsoft was scaling down some CoreWeave deals over missed deadlines, allegations the startup called false and misleading. Competition is also fierce. CoreWeave is up against cloud titans like AWS, Google, and Azure, as well as Oracle and IBM, that are investing heavily in AI infrastructure too. While CoreWeave argues those giants can't match its specialized performance per dollar advantage, they have far greater resources and entrenched enterprise ties. And it's not just the giants. Smaller rivals like Lambda Labs and Crusoe are vying for a slice of the AI cloud market as well. For investors, CoreWeave is a classic high-risk, high-reward play in the AI gold rush. Its IPO in March 2025 valued the company at around $23 billion, making it one of the biggest tech listings in recent years. The road to that debut wasn't perfectly smooth. CoreWeave had to trim the size of its IPO and price shares at $40, below the initial range, due to some investor wariness about its Microsoft dependency and huge spending. But those doubts didn't last long. Within days of trading, the stock surged over 40% above its IPO price to about $52, adding roughly $7 billion to CoreWeave's market cap and signaling optimism about its prospects. Still, the company now faces pressure to justify its hefty valuation by maintaining its torrid growth and eventually turning its losses toward profitability. Overall, CoreWeave has fashioned itself into a pivotal provider of the pick-and-shovel infrastructure for the AI era, the behind-the-scenes compute power. And the big question going forward is whether this former crypto miner can turn its early lead into a sustainable success story despite fierce competition and the challenges of scaling a capital-hungry business. If you enjoyed this video, make sure to like, drop a comment, and subscribe to Risk to Reward for more deep dives into the companies shaping our financial future. And remember, this is not financial advice. It's for educational purposes only. Stay smart, stay curious, and I'll catch you in the next one.